What is up everybody, welcome back to another stock market video, and today I'm going to be talking about RIDE Stock, or better known as Lordstown Motors, and the current short seller report brought out by Hindenburg Research. As usual, I'm going to go over some recent price action with the charts, then we're going to move over to some clips of CNBC's Jim Cramer discussing Lordstown, and also his interview with CEO Steve Burns. Because the report is so big, I'm just going to go over some of the major points that's being discussed, and at the end of the video, I'll discuss my own personal opinion about what I'm going to do with the stock. Just as a disclaimer, I'm currently not invested in them, nor am I against anyone investing in them. Also, as a new investor, I'll share my thought process of why I didn't invest into them when they IPO'd last year. Please hit like on the video as it really helps me out for the channel, and if you're interested in investing, hit subscribe. Otherwise, let's get on with the video. So first off, looking at the chart action, we can see here that is pre-market coming up to the 22nd of March, and it's currently up pre-market now at $13.51. Zooming out a bit, we can see that it was around about $10 for pre-IPO, and then in August that it came out and said it was merging with Lordstown Motors, and we can see it's had a bumpy ride ever since. Also, there's been 3 good peaks here at the lower $30, and it's come up there about 3 times, but now we can see that it's dropped off significantly by about 50% since February.
Right now, the auto industry is on fire, especially the electric vehicle place. Hey, Tesla just added the S&P 500 last night. I'm determined to cover all ends of this business because I know you want it. So tonight I want to circle back to one that recently came public by merging with a SPAC, or Special Purpose Acquisition Company. I'm talking about Lordstown Motors, symbol RIDE, easy to remember for you home gamers, which combined with Diamond Peak Holdings on October 26. At the time, the stock was $13. Since then, it has soared to nearly $25, including a monster 26% move yesterday. Nearly 10% gain today after the company provided a very bullish business update.
Before we go over to the report, let's just have a quick look at what Simply Wall Street has to say about Lordstown Motors. So Lordstown Motor Corp is an automotive company, develops, manufactures and sells light-duty electric trucks targeted for sale to fleet customers. So its stated rewards here is it's trading 23.5% below our estimated fair value, and its earnings are also forecasted to grow 63% per year. So we'll get back to this one later on in the report. So the valuation thinks that it should be closer to $17.38. So over to future growth, they've got a 63.1% of its forecasted annual earnings growth. And if we move the slider over here to 2025, we can see that the earnings are predicted to be $339 million per year. Looking at their financial health, they can cover their short and long-term liabilities. So moving over to ownerships, it's interesting here that it's got a flag saying RIDE insiders have only sold shares in the past 3 months. And we can see that a lot of shares have been sold by insiders in the last 6 months. So looking at the insider transaction, we can see that a majority of selling has been between the mid-20s to the high 20s, which means that the market cap would have been closer to about $5 billion then. So these people knew that the stock price was pretty inflated because they still hadn't got out a prototype truck yet or even anything out of production. So they were, I think it was a pretty good idea to be selling at that point. And just to note that 23% of institutions own Lordstown Motors and the general public owns just less than 40%, with 62 million shares. So over to TradingView, just to look at the charts, we can see that price action going up and down and touching the low 30s about 3 times and then coming back down again. What is actually interesting with the charts is that its current price right now is about $13.50, and we can see that it's got a lower range of about $12.50, and remembering that it IPO'd at $10, so I don't actually think it's going to drop anything lower than $12.20. I'm not invested, but if I was invested, this would be a great buying opportunity because there's going to be a lot of buyers coming in anywhere below that. So for the investors that don't really care about the short seller report or don't believe in it and believe in Lordstown Motors, this is a great price to be picking it up. We can see from previous history, although that doesn't really mean anything sometimes, that it has good support around here and is likely just to bounce back up again for some quick gains.
And it seems as if some of these orders, the 50,000, are from Solid, Duke Energy, First Energy. These people are not going to be walking away. They are committed.
Right. Yeah. All of them. You know, when you order, I think our average order size is about 500 trucks at a time. And, you know, as most of them are signed by the CEOs of these large firms. And, you know, bringing in 500 electric vehicles into your fleet's not trivial. So you got to plan all the charging and everything. So it's very serious orders.
So as you heard right there, Lordstown CEO Steve Burns has called these arrangements very serious orders. The actual customers' agreements, which we present for the first time today, require no deposits and are non-binding. Many of the supposed customers do not operate fleets, nor do many of them have the means to actually make the stated purchases. So right here from Hindenburg Research is the actual short seller report titled The Lordstown Motors Mirage, Fake Orders, Undisclosed Production Hurdles, and a Prototype Inferno. This was published on March 12th, 2001. Right, due to the fact that this report is so massive and there's a lot of bad things in it, I'm just going to go over the top 5 summary points that they've disclosed here. Let me just scroll through and show you how big the report is. Now don't worry, you can see, I'll put a link in the description of this whole report if you want to read it one time. I highly suggest you do. There's a lot of bad stuff in here. I haven't actually read it all myself, it's just too big, but we'll just go over some of the summary points. Let me just scroll through and show you what actually is involved in here. So that is a very, very long report, including where the orders have come from, where they've actually gone in and said, this is the address here, it doesn't belong to anyone, these people here aren't very serious. Right, so going back to the top, reading the first point here, Lordstown Motors is an electric vehicle SPAC with no revenue and no sellable product, which we believe has misled investors in both its demand and production capabilities. So that's really the main talking point of the short seller report, that they reckon these orders are pretty much made up, and as you heard from Steve Burns there, that he's saying that they've got a lot of orders in the background and they're ready to come out, start production very shortly. The company has consistently pointed out to its book of 100,000 pre-orders as proof of deep demand for its proposed EV truck. Our conversations with former employees, business partners, and an extensive document review show the company's orders are largely fictitious and used as a prop to raise capital and confer legitimacy. For example, Lordstown recently announced a 14,000 truck deal from E Squared Energy, supposedly representing $735 million in sales. E Squared is based out of a small residential apartment in Texas that doesn't operate a vehicle fleet. Another 1,000 truck, $52.5 million worth of orders, comes from a 2-person startup that operates out of Regis Virtual Office with a mailing address at a UPS store. We spoke with the owner who acknowledged it won't actually order any vehicles, instead describing the pre-order as a mere marketing relationship. Yet another firm that is supposedly set to buy 500 trucks from Lordstown told us the letters of interest are non-binding. It's not like you obligated yourself to pre-order or that you would have to contractually abide yourself to buying this truck. That's not what they are. So now let's go back to Jim Cramer and see his reaction about the short seller report.
Jim, Lordstown is facing an SEC inquiry for allegedly misleading investors. And your colleague on CNBC this morning, Phil LeBeau, did interview CEO Steve Burns, which we'll get to in just a moment. But I just want to get your first take on what to make of the Lordstown news.
Well, Nate Anderson, Hindenburg, first put out a report on its way that talked about how Lordstown has some serious issues with the truth. And I found it gut-wrenching because I had pressed Steve Burns when he was on the show, the CEO of Lordstown. I had pressed him on Mad Money about how serious the orders were for the company. And he said they're very serious. He had signed letters from CEOs. He could have easily said, look, we never know what's going to happen with orders, which is fine. You could have said that. He did not say that. Well, this morning, Phil LeBeau, who's an amazing reporter, asked him point blank. And Burns said, I never said that they were serious. I don't know where you got that. So then we ran the tape of when Burns said it to me on Mad Money. So to me, I felt it was like the prosecution rests. You don't even need to have a discussion. You just listen to what he said to Phil. You listen to what he said to me. Case closed. You decide. I listened and I just said, that is someone that is hard for me to trust. And that's where I come out.
So let's now just move on to that exact interview that Jim Cramer is talking about, and I'll play it right now.
Let's be clear here. The way that you have characterized your pre-orders or reservations in the past, I mean, you called these on CNBC serious orders. Now, people would look at this and say, if you have a company that's not putting down a deposit, that doesn't have a fleet, but basically are collecting letters of interest. Are those truly serious orders?
Well, no, Phil, we've always been very clear, right? These are just what they're intended to be, right? These are non-binding letter intents. They're called pre-orders out in the kind of real world. So always classified them for that, and we have a lot of those pre-orders. I think, we have pre-orders directly from fleets. We have pre-orders from people that sell to fleets because that's the way fleets buy. Fleets don't buy in general, they don't buy like consumers buy. They buy through intermediaries. And so all we've done is gone out, gauge interest, because you got a tool to build something like this in an automated fashion. We're going to build one of these every 6 minutes. We kind of have to know how to tool, and you got to know about a year in front of your building. So that's what everybody uses pre-orders for. They are always, by definition, non-binding, no money down, cancelable. I mean, that's just that's the nature of EV startups trying to gauge interest.
I understand that, Steve, but some people would look at this and say, look, you were far more aggressive in characterizing those pre-orders as true commitments, that you have company XYZ that has said, yeah, sign us up for 5,000 or 6,000. Do you regret the way you characterize those reservations?
Well, Phil, all I can, I don't want to get into the specifics. All I can tell you is demand is robust. We've never said we had orders. We don't have a product yet. By definition, we can't have orders.
So as a new investor, I think it's very important that you look into CEO interviews and really have a look at their responses to some of the issues that's related to the company when it affects them directly, especially ones like Lordstown Motors and these accusations. And from his responses there, I do think that he did lead the investors in some sort of way. It might have been not the full way, but I still think it is quite misleading. Also, one of the reasons I wouldn't be investing in the stock is because that they are a startup, and therefore you can see here that they're going to be losing money until they get production, and that they've already missed their EPS earnings. Not very good for the stock, and that is another reason why I wouldn't be investing. Another classic example is Nikola Corporation. They were also a startup that were a SPAC. They did the merger. So looking from their financials, we can see that they've been constantly losing money. So as a new investor, I don't really want to invest in a company like this that's losing money, that doesn't have a product, and that isn't generating any revenue. And we can see from the chart that it gets a lot of momentum, and then the stock price will come down to eventually meet the company's fundamentals, and in this case, no product, no generated revenue. Therefore, it's pretty much coming back down to where it started at the $10 to $12 mark. So for my final thoughts, I personally won't be investing my hard-earned cash into this company due to the information stated in this video. While the short seller report has been very damning, along with the CEO not very convincing, and the stock has been negatively impacted in the short term, its investors will still see some upside as they haven't actually seen the product in action yet, which is the endurance truck. In general, investors are still pretty optimistic, especially in the hope of finding another Tesla. And also, Nikola stock is still trading, which we all know what happened with them. One of my main criteria for investing in a stock is that it has revenues. This tells me that the company is making money. Now, they might not be into profit, but at least some money is coming in. The main reason for this is I know that if money is coming in, that the company is basically not going to go bankrupt soon, which means that my shares will be at least worth something. And as a new investor, this is really important because I don't want to be picking a company so risky that it goes absolutely to zero. The main point that I made this video is really about understanding the companies that you invest in and knowing the risks involved. I invest in EV stocks. I understand that they are very risky. I expect swings of up to 40%. However, I lower the risks by understanding more of the company I'm investing in. If there are downturns, at which point I check the fundamentals of the company. Has the CEO done anything dodgy? Has the management done anything dodgy? Is the company in the news done anything dodgy overall that has made investors not want to invest in them? Or is it just a market-wide correction where the whole market has come down and it's a bit of a red day and all the stocks are losing value and there's actually nothing fundamentally wrong with the company or nothing has happened at all? These are all the things that I check when I see the price has dropped down by 5 to 10% to make sure that I'm keeping a good eye on the companies that I own. In this EV sector, Tesla is worth $600 billion give or take because it has shown years of execution. Also with NIO valued at around about $70 billion, its manufacturing numbers month on month have shown that it can scale with provincial backing. However, investing in Lordstown Motors worth about $2.5 billion that hasn't yet have a proven working prototype and the CEO going back on his word is very, very risky. One I'm not willing to gamble on. Well, that is enough for me today. Thank you for watching. As always, make sure you do your own due diligence in the stocks that you buy. Don't just follow me, because remember, I'm new to investing and I'm just sharing my thoughts with you. Feel free to comment down below about your thoughts on Lordstown Motors if you're investing, or what do you think about the short selling report. With that said, may the gains be with you, and I'll see you on the next one. Goodbye.